MSTY pays out 65% distribution according to their website. Now, a few weeks ago, 99% of that payment wasn't income. It was your own money handed back to you. The reason I bring up MSTY is because it's definitely one of the most famous Yieldmax ETFs because of the distributions being so high. Even a year ago, even 6 months ago, they were paying distributions according to their website of 183%, 150%. It was very extravagant and it got a lot of notoriety. Let's sit with that for a second because most people who own MSTY have never once looked past their headline number. 65%, which is the current distribution, sounds incredible. It gets clipped, it gets shared in comment section, it gets used to justify putting real retirement money into this fund, but yield and income are not the same thing. And the difference between those two words is exactly what I'm going to show you week by week using the fund's own distribution data. Because once you see how this often happens and how unpredictable it is, you're going to look at that 65% number completely differently. Now, before we get started, a brief disclaimer. Even though I have a background in the financial industry and I do have an engineering degree that allows me to analyze ETFs perhaps much more closely than other people, nothing in this video is meant as financial advice. It's strictly for educational purposes only. And I always tell the viewers to do your own research because investing comes with risk, including loss of capital. So always consult with a financial professional before making a decision. So here's what MSTY actually does. First of all, they do not own MSTR directly. What they do is they use options, synthetic long positions, call spreads, and treasury collateral to generate exposure to MSTR's price movement and then harvest income from its volatility. And when MSTR is wild, and it is arguably one of the most volatile stocks on the market, that volatility generates large option premiums, and those premiums get paid out to you weekly. And that's where the current 65% comes from. Now, here's the part most people skip. When the fund doesn't generate enough premium income in a given week to cover the distribution it wants to pay, it makes up the difference using something called ROC, or return of capital. ROC means exactly what it sounds like. The fund is giving you back your own principal and labeling it as a distribution. And by the way, earlier in the video, I mentioned 99% plus distributions. That's actually what is meant by ROC. And in 3 separate weeks, the entire payment, or almost the entire payment, was simply your own money cycling back to you. And that is not income, that is withdrawal disguised as a paycheck. So if a meaningful chunk of your distributions are just your own capital, where did the rest of your money go? And here's the number that actually matters. And I did a back test to show you the brutal reality of having owned MSTY, especially when looking at those really outrageous dividends that were advertised even last year, and where your capital would have been now, or is now, if you had invested back then. So what I've done here, and what I'm showing you, is a back test that I did on MSTY. And what I did is I went back all the way to January 2025. If you had invested $10,000, and I backtested it all the way to May 2026. Now, one takeaway from this backtest is that the portfolio had a negative 29.2%. So that in and of itself shows to you that this wasn't a really good investment. And taking a look at what the end balance would have been, had you started with $10,000, you would have ended up with $6,100. So that is a return of negative 29%. And coupled with the reduced amount of distributions that MSTY has had. This is really not a ETF that I was really enamored with from the beginning, and especially now that it's really been going down. And let me give you some more details on this, and here is straight from their website. Let's look at the actual numbers, not the headline yield, the weekly checks. So back in mid-December 2025, right after MSTY's reverse split, the fund was paying in the 40 to 59 cent range per share per week. Now by April 2026, it had drifted down into the low 30-cent range. There was a brief spike in late April into early May. Distributions jumped back up to the 49 to 55-cent range for about 3 weeks. And then it dropped off a cliff. By the end of May, back down to 30 cents. By mid-June, 21 to 25 cents. That's a decline of nearly 50% from where this fund was paying out just 6 months earlier. Now, here's where it gets really interesting, because the brief spike in late April, the best stretch of distributions all year, that deserves a much closer look. And every single MSTY distribution discloses something called return of capital, or ROC for short. So it means exactly what it sounds like. Instead of paying you from the actual premium income, the fund hands you back a portion of your own invested principal and counts it toward that week's payment. Now let's take a look at the April spike again, the 3 best weeks of the year. So April 22nd, April 29th, and May the 6th. The ROC was over 99%. And those were not the 3 strongest weeks of real income generation all year. They were the 3 weeks the fund relied most heavily on giving you your own money back. And this wasn't a one-time event. I went through all 29 weekly distributions since that reverse split in December, and 18 of them, or nearly 2 out of every 3 payments, had an ROC of 90% or higher, including the most recent one, June 17th. Distribution 23 cents, ROC 96.8%. So the bottom line is the yield or distribution right now on the website is 65%, right? So it doesn't mean MSTY is broken, because the fund discloses every one of these numbers openly every single week the moment the payment is announced. So the information's never been hidden. It just means most people collecting that check never look past the dollar amount to see where it actually comes from. And now you have. So in my opinion, and again, I gotta stress my opinion, MSTY is not the greatest income ETF of all time. For MSTY, the saying, if it's too good to be true, it probably is, definitely applies. The distribution is way too high, it wasn't sustainable, it's not meant to be sustainable, and there's definitely better options out there for you. Here's a link to a video I recently made about one of those options. Take a look at it here. Thanks so much. Have a great and prosperous rest of your week.